Is now the right time to be buying gold? With declines in the stock market so far this year and inflation on the increase, is gold a good bet to preserve capital and a safe haven for investors it is often considered to be during times of uncertainty and turbulence? Well, that is what we're looking into today. So if today's recording helps up your investment game, don't forget to like, subscribe and hit the bell notification. And don't be greedy, guys. Share this video with those who will benefit from it. My name is Zahir Anwari. I'm the co-founder of SublimeTrading.io. We've helped hundreds of private investors over the past 10 plus years profit from trends in the markets through our simple to learn methodology. I also write for a number of publications including benzinga.com, and I'm regularly invited to guest speak on how everyday people can supercharge their stock's performance with a particular focus on the next 3 to 5 years. Okay, so before we get into the charts of gold, just a quick word on owning physical gold. Gold often comes in the form of jewelry, coins and bars. It is one way for investors to pass on their wealth, for example, through inheritance. I believe on average people often have between 5 to 10% in gold. But owning physical gold comes with challenges. Storage, for example, is the first challenge that costs money. And secondly, like any other financial or investable asset, that value goes up and down. So you could hold a significant amount of money in physical gold and see absolutely no growth for many years. This means your money is just tied up with little to no return. If, like me, you don't have a particular fixation with gold and jewelry, then we can still invest in gold both long and short using investment vehicles such as spread betting and CFD accounts. And remember, spread betting here in the UK is tax free. The beauty of this is that I only buy and sell gold only at the optimal times, and when gold is flat, which it can remain flat for long periods of time, I move my money to other assets that are performing far better than gold. So my money is not tied up in physical gold with no growth. Okay, so let's switch into the charts and get a better idea of what price action is actually doing. Okay, so this is my typical 3-screen setup when I'm doing my analysis. If you're new to this Okay, so this is my typical 3-screen setup whenever I'm conducting my analysis, regardless of which asset class I'm looking at. Here we're looking at gold. You can see gold in the top left corner, and the 3-screen setup is the monthly in the top left, the weekly in the top right, and the daily chart down here across the bottom. Now, why do we look at the monthly, weekly and daily? Because it gives us a much clearer picture of what price action is doing. We're looking at the higher time frames. When you start going down into the lower time frames, you enter day trading territory, which requires a lot more work for a lot less profit. In fact, a lot of people lose a lot of money on the lower time frames. By moving up to the higher time frames, A, we get a clearer picture of what price is doing, and B, is where we catch the bigger moves by doing far less work. And that's really the beauty of investing or long-term trend following. So let's start with the monthly time frame. Now, some indicators on here, the black dotted lines that you can see going across the charts, those are my major levels of support and resistance. The green line up here, this is the high of the previous calendar year, so January to December 2021, this is the high, and this red marker here is the low of the previous calendar year. Okay, now first and foremost, let's have a look at the history of gold. We know that gold is a commodity. Now, if you're unaware of this, the natural movement to commodities is that it can go sideways for many years, and then it can trend for many years. That's either to the upside or the downside. So if we actually look at gold here, we can see that for many years, gold just went flat. In fact, if I just compress the chart, just to see where price is around this area here, from the 80s, all the way through to around 2005, gold was just in this sideways market. Eventually price broke out, which was in 2005, and when price did eventually break out around this area here, it went on this bull run from 2005 through to this high of 2011. So you're looking at a 6-year bull run, and during that time gold moved over 350%. So that's a significant climb in price over a number of years. Now, as the saying goes, after every move, the market consolidates. And as already mentioned, as gold is a commodity, when it goes sideways, it can go sideways for many years. And if you look at what price has been doing since that high of 2011, the market's just been going sideways. Now, there was a bit of a run between 2018, that's the low here of August 2018, and August 2020, price went on a bit of a run, but it printed a new high and then came back down into this area of consolidation. So really, since the high of 2011, price is still trading around that level, just below it, 10, 11 years later. So this is a really, really good example, guys, of how when you get into gold, particularly physical gold, you can own gold for many years and see absolutely no return on your money. And this is really why spread betting, a CFD account, or maybe even an ETF, depending on when you enter, can be far more beneficial, because what it allows you to do is more control over your money, and you can move it from one asset class to another. We want to be investing in assets that are trending, that's either to the upside where we can go long, or to the downside when we can go short. And we want to stand aside on assets that are going sideways. And gold, since, as already mentioned, 2011, it hasn't really gone anywhere. If we look at current price action, it's trading inside the high and inside the low of the previous calendar year. So it's still trading inside an area of consolidation. If I was looking to buy gold, I would want to see price break and close above the high of August 2020 and start printing new all-time highs. And that for me would make gold far more appealing. And when it does eventually break out from consolidation, based on its performance, its history, we know that it can go on to trend for very, very long periods of time. So it's worth waiting for the market to actually break out before taking a position. Okay, let's have a look at the weekly time frame. Now, on the weekly time frame, if I just open that up, the weekly time frame does have a bullish bias. It's trading above the 200 moving average. An asset that's trading above the 200 moving average, as it is here, has a bullish bias. If it's trading below the 200 moving average, it has a bearish bias. Gold has a bullish bias, but even still, if we look closer at price action, if you look at our trend filter, it's alternating between green, grey and red. When an asset is going sideways, our trend filter will confirm that through the trend filter alternating between green, grey and red. Well, during a period of trend, we want it to bullish trend, we want it to remain green. During a period of bearish trend, we want it to remain red below the 200 moving average. But as already mentioned, when it's alternating between green, grey and red, it's a sideways market. And we can see that anyway, just looking at the bars and looking at price action, it's just going sideways. So even though it has a bullish bias and we want to look to buy gold, at the moment it's going sideways and it's not the best time to be looking to enter. A breakout of consolidation, so once it starts moving above this area of resistance, that's when we can consider, or that's really when the odds are in your favor to start buying into gold. And if we come down to the daily time frame, now if you look at the daily time frame, guys, look how flat the daily time frame is. First of all, you can see that with price action itself, it's just a sideways market. It hasn't gone anywhere. There's an area of resistance here at the top, and there's an area of support here, and you can see that price has just remained within resistance and support. So that's the first clear indicator that we're in a sideways market. The next indicator is the fact that the moving averages are so flat. So if you look at the moving averages, we've got the black line, which is the 200 moving average, simple moving average, the yellow line, which is the 50 simple moving average, and the blue line, which is the 20 simple moving average. In a period of trend, so if you can just go back to around this area here, in a period of trend, the 20 should be above the 50, which should be above the 200. That's when the market is moving to the upside. We want alignment. The 20 simple moving average above the 50, above the 200, and we want price to be above all three moving averages, as it was here briefly during this move to the upside. However, since this high point here, which is August of 2020, the market has gone flat. Let me just compress the chart. The market itself has gone flat. You can see that with price, but also look how flat the moving averages are. They're just going sideways and crisscrossing above and below each other. A clear indicator that we are in a sideways market for now. Once price breaks out and starts moving to the upside, the moving averages will align. 20 will be above the 50, which will be above the 200, and we'll have confirmation we are in a bull market. And that's really when I, based on my indicators and my analysis, I will look to buy gold. Now, of course, if you're adding to your gold portfolio, you know, whether it's physical gold or through through a speculative broker account like a spread betting or CFD account. You just got to be careful that the market could continue going sideways for lengthy periods of time. I mean, it's just this recent consolidation has been from August 2020 up until June 2020. So in another 2 months, that'll be 2 years of sideways market. If we go even further back, then we go all the way back to 2011. So that's 12 years of sideways market. Patience is often a virtue, guys. Learning to let the market set up and establish high probability environments and then allocating risk will do you better on the long run. For now, you're better off focusing on other asset classes, whether that's stocks, maybe other commodities, maybe the forex market, that are offering better high probability opportunities. So to answer the question, is now the right time to be buying gold? Based on the technicals, not yet. For us here at Sublime Trading, we're going to wait for the market to break out, start printing new all-time highs, and then we'll look to start adding gold into the portfolio. And remember, when it does move, gold can be very profitable. Okay, I hope you enjoyed that, guys. Don't forget to like, subscribe, hit the bell notification. Where do you go from here? Go down to the description below. Click on the link in the description. The link will open up into this scorecard. Are you ready to skyrocket your stock performance? Click on the button there, guys. Take the scorecard. This will take you less than 2 minutes to complete. 21 rapid fire questions. At the end of the scorecard, you'll get a breakdown of your results, which will tell you exactly how you're currently performing and what you need to do to get your portfolio performing to the level that you want it to. Now, in addition to that, once on completion, you will get 30 days free access to the Hot Stocks Vault. This is where we scan the market for you every week and share the best 10 performing stocks that are in the UK and US stock market. Not only that, you will get 30 days free access to the 3-screen setup that I just did my analysis on. You get a stock of the month. You get a whole video syllabus that explains how to do your analysis in more detail. Just a lot of goodies that go into the Hot Stocks Vault. So click on the link below, complete the scorecard, and on completion of the scorecard, see you in the Hot Stocks Vault, free for 30 days. I hope you enjoyed that, guys, and I will see you in the next recording.